Hey everyone, happy Wednesday, November 22nd. It's about 9:30 in the morning on the West Coast and time for another market update. With Thanksgiving tomorrow, like I said, I was going to do the video a week or a day early. So it's been a pretty quiet week in the markets, short week with the holiday. But the first thing we got a couple days ago was the November NHABs, of the National Association of Home Builders, their optimism index. And they're basically looking to the future. They're a little down though compared to how they were the last couple months. So as you can see, anything above 50 means they're gonna, feel positive about things going forward, and anything below 50 is negative. So last 4 months, it's dropped below that 50 mark and down to, I think, the lowest since the December of last year. One other thing that came out of this is I believe that about 36% of home builders report doing price cuts, which is good for home buyers. And then recent data, though, there, as you see this quote from their chief economist, it's down right now, but they feel good about future sales. With inflation coming down, with rates easing a little bit, things like that, they feel good about the future. So that's good. And they were doing really well for a really long time. So, take that with a grain of salt. The next thing we got on the builder front is October starts and permits. So up, like I said here, up but not enough. So like we know, the starts and permits has a lot to do with future supply. So for October, as you can see, completions were down across the board, including a single family and definitely multifamily. But year over year, completions are up for multifamily about 4.6%. I'm sorry, for overall, single family is up about 2%. But then when you look at future inventory, so starts and permits, you can see that's where things start to go negative, especially on the multifamily front. Look at multifamily permits year over year, 26%. So basically, multifamily, they built a lot over the last year. There's some completions happening, so that will help for rent, but they're not pulling permits. And a lot of that has to do with what the Fed's been doing. Not only has credit and rates and all that got higher for, home buyers, buying, homes, but it's also for companies and builders because they do loans to do these projects. So basically it just doesn't pencil out on paper for them right now to start these big multifamily projects. So that's one reason why you see that number so low right now is, the Fed's having an effect on them just like they're having on mortgage rates. But overall, like we've talked about, even if we go future huge number here, 1.49 million permits, so future housing, household formation, so the demand factor is about 2 million across the country right now. So we're lagging behind, still in inventories tight as is. So that's not necessarily a good sign. Good sign for current homeowners, not good sign for people that, want prices to come down. Next thing we got October existing home sales. So those actually hit a 13-year low. So let's take a closer look at those numbers. So like I said, about 13-year low, down 4% month over month, down 14.6% year over year. Median home price is about $391,000, down month over month, but up year over year. So like I said, inventory is about a 1.15 million units. Keep in mind, right before the housing recession, 2007, 2008, that's about 4 million units. So quite a big difference there. We're about 3.6 months supply, where normal market's about 4.6 months supply. Things are still selling relatively quickly. You can see that's weakened a little bit. It was at 21 days, it's up to 23 days, but still under a month. And 66% sold in less than 30 days. So keep in mind, with inventory way down, which I believe inventory is about half the levels that it was in 2019. And 2019 wasn't necessarily a high level of inventory. So we're at really low levels of inventory with high rates, low inventory. Existing home sales are going to fall behind. And as you can see, there's still, strong bids per home sold, about 2.5 bids for every home sold. So there's still a lot of competition out there, according to the survey. Next thing we got was initial job claims, and we know this is important. Inflation's coming down. The Fed is still looking at the job market saying that's really strong and holding their hats on that. But this came in a little bit lower than expected. There was expected to be about 225,000, initial job unemployment claims when people first put a claim in. That came in at 209,000. Continuing claims fell a little bit, but both these numbers have been trending upwards. Like I said, continuing claims is still at a high level. And like we talked about, basically just shows it's a tight labor market. Employers are trying to keep employees, but when someone does get laid off, they're having a harder time finding full-time employment. So miscellaneous stuff. So the first one, leading economic indicators. So there's something called LEI, leading economic indicators. That's basically a forward looking at the health of our economy. It's a pretty good recession indicator. That was down a negative 0.8% month over month, worse than expectations. And also that's the 19th straight months it's been negative. That's a lot of months in a row. Historically, once it turns negative once, not all in a row, but just once, it's about 22-month average before we're in a recession. So right now we're at 19 straight, not, here and there, but 19 straight months, this indicator has shown up negative. So it's just kind of another, sign that this country might be heading towards a little bit of a mild recession. They think a mild recession. And keep in mind, like we covered last week, recessions aren't necessarily the worst thing for mortgage rates. They're not necessarily the worst thing for housing. So just keep that in mind. And then the Fed minutes. Fed, remember, they released their minutes from their last meeting, which was a couple weeks back. This was pretty hawkish, meaning they still talked about keeping rates high and all that kind of stuff. But remember, this was before a couple of inflation reports, before a BLS jobs report. So since that's happened, a lot of things have changed with the data they have. So the markets didn't really react too negative to that number, when that came out, or those minutes when they came out yesterday, even though they weren't saying necessarily what we want them to say. So where does that leave us? The average 30-year conventional is down to about 7.33. Let's just call it even because, it hasn't come out. This hasn't updated the survey yet today. And so, and today's a little bit of a negative day. So right about where it's at. Nice little rally, though. We were up above 8, remember, about 3 weeks ago. And now we're down to about 7.36. So that's a good rally. So if we could average that, coming down, 3/4 of a point or so, every 3 weeks, I would take that. But again, we're probably looking towards when they do their first rate cut to see big drops in mortgage rates, which be, hopefully March, maybe sooner, depending on how our economy goes. So important dates next Thursday when I do my next update, we'll get fresh PCE inflation data. You'd expect that to come in pretty good because the CPI, we already got CPI data for this month, for November. So we'll see this date that PCA report's a little laggy. So we already kind of have an idea that's going to come in our favor, hopefully. So that should be good for us. That BLS jobs report on the 8th, that's going to be a big one because we got that Fed meeting less than a week later. Right now, the markets, it's like 99% chance that they pause, continue where they're at. There's actually a 1% chance they're saying maybe they cut, which I don't think that would happen, but that'd be amazing. But there's right now the market's saying no chance that they would hike. So that's good. But we'll have to keep an eye, like everything, we'll have to see what they say when they have their press conference. So hopefully they pause and then start saying the right things about, hiking in the future. So that's all I got for you guys this week. Hope you guys have a wonderful Thanksgiving holiday, spending time with family, having great food, watching football. Go 49ers. Sorry to all my Seahawk friends out there. But I hope you guys have a great week. And if you need anything at all, please don't hesitate to reach out. Thanks a lot, guys.